Hello and welcome to another Smaulgld live stream. Tonight is Saturday night. It is November 3rd, 2018. Tonight's topic: Goldman Sachs, Morgan Stanley, Fidelity, and Wall Street move on crypto. We're going to give you a little bit of an update on what's been happening. The interesting thing about the crypto space is it is ever evolving, ever more money being poured into it, more products, more plans, more innovation. And it's interesting, a lot of people learn what they need to know, what they think they need to know in order to form and defend their position. Bitcoin's expensive, Bitcoin is slow, Bitcoin uses energy, whatever it is, and that is all I need to know. And they will repeat that for years. Mt. Gox, they'll still be talking about Mt. Gox, they'll be talking about Tether, not realizing what has gone on since they formed their opinion. And as you know, the way I try to analyze things with respect to gold, silver, crypto, the economy, is things are always changing. And as the facts change, obviously, you have to possibly alter your opinion. But citing old facts when they have been superseded generally doesn't work. Now, in gold and silver, it's not as much of a dynamic space. After all, gold and silver have been around for thousands of years. They have been studied inside and out, and they themselves don't change. So there's not much of a need to analyze the molecular structure as if it's going to change. Cryptocurrencies are constantly changing. How regulation is reacting to them, states and other actors are relating to them, how they're growing, how new innovations are coming online. Ideas are tried, ideas die, ideas work. Money comes in. It's totally different than being a gold or silver analyst. It's even faster paced than the economy because we also have had thousands of years of studying economic trends and understanding bull markets and interest rates and things of that nature. The crypto space really does require a much more day-to-day analysis, and things really can change. So it's interesting when we hear people say that they understand cryptos, they know they're going to the moon, or they know they're going to zero. They know nothing. Okay, but before we get to that, I have an interesting story here to share with you. One of the themes always is BRICS are going to crush the dollar. They've had it with the dollar, and China's going to crush it. All those gold pumping stories. I don't know how the world's a better place when it's run by South Africa, China, and the other BRICS countries. But as you know, there has been an election in Brazil, and a Trump-style nationalist, Jair Bolsonaro, is now the Brazilian president-elect. And of course, he has pledged a lot of radical changes, I would imagine, for Brazil, which has been pretty much a far-left country for years. And now he's going on the Second Amendment. He's looking to put in place a U.S.-style constitution. And I think China's a little concerned that that may also turn into, well, what happens to the relationship with China in trade. And indeed today, trouble in BRICS land. I see a editorial in China Daily, which is probably most likely very state-run, and they say no reason for tropical Trump, that's what they call Bolsonaro, to disrupt relations with China. And they appear to be concerned that tropical Trump, Bolsonaro, might try to upset the relations that they have. And it goes on to say that he may sound less friendly to China. He has sounded less friendly to China on the campaign trail. They mentioned that Bolsonaro had said that China was a predator looking to dominate key sectors of the Brazilian economy. So China is a little bit concerned about Bolsonaro, tropical Trump. The BRICS were never, ever a dominant bloc, because the BRICS are made up of countries that don't all necessarily get along with each other. China and Russia have warmed relationships over the last 10 years, but historically China and Russia are enemies. India is also not a big fan of China. That's the I in the BRICS. South Africa, I don't know what they have to do with any of all this, but they're involved with the so-called BRICS. And then you've got Brazil on the other side of the world. So the idea that the BRICS are going to unilaterally crush the dollar was nothing more than gold pumper talk. And it doesn't look like the BRICS are going to remain a bloc if they ever were one. After all, India is joined with Japan, the United States, and Australia in an organization called the Quad. And I've done a YouTube on that and a blog post, which is designed to compete with the Belt and Road, which is hitting some pretty big potholes along the way, with many countries canceling their Belt and Road projects for the same reasons that Bolsonaro was concerned that they would end up in some type of Chinese debt trap. We'll cover that tomorrow in depth, the whole BRICS and Belt and Road and China to crush the dollar nonsense. As we've seen, the yuan is the one getting crushed. It's not the dollar. Okay, well, let's get into the crypto update. And a lot of the people here are here just for the precious metals. That's okay. You don't have to listen. Remember, the channel is about primarily gold, silver economics, and cryptocurrencies. You can't avoid something like cryptocurrencies, especially because they impact the economy, and they're also an analog in some respects to gold and silver. Well, let's look at the prices of the cryptocurrencies. So Bitcoin continues to be, it continues to be flat. I mean, it's 63.26 last 24 hours. That's just down 0.32%. Bitcoin Cash up 483, up 5%. There's something to do with Bitmain. I don't know what's going on with Bitcoin Cash. There's an upcoming fork. I should pay more attention to that. I just haven't. I will probably by tomorrow. Ethereum flat at 198. Litecoin down 0.73% at 50.57, and the Ethereum Classic at $9.08. That's up 0.11%. So the cryptos have been very flat. But let's get into what's been happening with the cryptocurrencies. Now, a lot of people keep saying they're going to go away. They're not going anywhere. They're not going to zero, and they're not going to be outlawed. And I'm going to give you some even more. I mean, I don't know why anybody even thinks that they're going to be outlawed, because I'm going to show you a few more items here. The other day we were talking about how the SEC has set up a web page and how to get your ICO registered with the SEC. That doesn't sound to me like they're outlawing anything. They're encouraging companies to bring their ICOs to market and have them registered. Why? Because their buddies that are bankers and Silicon Valley venture capitalists want that, because they want to make the money that they didn't make in the last few years of ICOs. Remember, 4 billion ICOs were created in 2017, and they were not Wall Street backed. They were not Silicon Valley backed. They were backed by people with white papers and a lot of YouTube channels and celebrities. They want a piece of that action, and the SEC is there to help institutional investors, institutional organizations like investment banks, lawyers. That's their bread and butter. And also the SEC makes registration fees for reviewing these types of documents. So that's one of the things that the SEC has already outlined. The CFTC has already approved Bitcoin futures trading, CBOE as well. And it's interesting, people say, well, it's a Ponzi scheme. Bitcoin's a Ponzi scheme, which is kind of ridiculous. And no matter, first of all, they call it a Ponzi scheme because it requires more people to buy the Bitcoin for the price to go higher. But that's true of just about any asset. If people stop buying gold, silver, or stocks, the price would go down too. That's not really the definition of a Ponzi scheme, that it requires somebody else to buy it. Without getting into Ponzi scheme definitions, do you think that the CFTC would approve Bitcoin futures trading so they can trade a Ponzi scheme? Now, that wouldn't make sense. Or an illegal Ponzi scheme. They're basically saying it's legal. They don't have futures on Ponzi schemes. The SEC wouldn't encourage ICOs to come forward, have their documents reviewed by the SEC. So yeah, bring your Ponzi scheme here. The SEC wants to take a look at it so it can analyze it and make your registration statement go effective. And the other thing is, we're going to see, there's an annual conference held by CoinDesk called Consensus Invest. Now, the chairman of the SEC is going to be attending that. We're going to talk about that in a bit. But the idea that somehow they're going to outlaw it and arrest everybody when billions of dollars have been invested in it by many of the major investment houses, hedge funds, and so on. It just makes no sense when people continue to say that that's what's going to happen and that all cryptos are going to go to zero, which is an even more ridiculous statement. That's like saying all stocks are going to go to zero. Cryptocurrencies are not just Bitcoin. It's possible that Bitcoin or Litecoin or any coin can fail as a currency. But cryptocurrencies and tokens consist of so many different projects. It's not just about one currency and that therefore they're all going to go to zero. That's like saying Apple has no future. Apple's going to zero. Therefore, all stocks are going to go to zero. And the only thing in the world that's going to be worth anything is gold and silver. That's pretty much what you hear from some of these channels. But here's why Wall Street wants to get on in this. First of all, there's trading platforms. Well, the trading platforms right now are not run by Wall Street. Coinbase, Binance, all of these trading platforms. Well, Fidelity has already said they want in on it. They've announced plans to launch, at least initially, a trading platform for institutional investors. There's another entity backed by TD Ameritrade called ErisX, going to do the same thing next year as well, a crypto trading platform. Then there's the big one, Backed, B-A-K-K-T, which is backed by ICE, which owns the New York Stock Exchange. It is also backed by Microsoft, Starbucks, and the Boston Consulting Group. And this backed entity has even more ambitious plans to not just run a crypto trading platform, but to arrange storage and also to help with payment processing. That's why Starbucks is involved, so that people can convert their cryptos into fiat and then they can buy their coffee. Now, you can see what's going on there. There's not an acceptance of crypto itself as a medium of exchange, as a currency, but they're acting as a bridge to turn it into fiat. Now, this doesn't sit well with a lot of the anarcho-capitalists or the more libertarian view of Bitcoin, be your own central bank, get away from using the intermediary. Well, I think people are going to have to live with both. Yes, you're going to have the unbanked, the people in Uganda and elsewhere, their first movement into payments. Venezuela, it may be getting themselves a wallet and trading cryptocurrencies directly, mining them directly, and so on. But many people in the Western world are used to intermediaries, are used to trading on registered platforms, being tracked and traced and taxed on those transactions. They're not, if people already go online and they click a button and they buy an Apple share or some other FANG stock, and one of the options instead is Bitcoin or Litecoin, yeah, there's some people who are going to say, I don't want to do that. I don't want to I'll buy it directly. I'll store it on my whatever wallet. But many people and institutions for sure, they're not politically or even philosophically opposed to anything. They just want to make money. And if these companies backed ErisX, Fidelity can make that happen, they're going to get the business, and they're not going to see it as any intrusion on their privacy any more than if they were to buy IBM stock on those platforms. So that's one reason that Wall Street wants it, or the trading platform, and they've invested a lot of money in stable coins. Circle and Coinbase have come up with a coin, I think it's called US dollar coin, and it's totally backed by US dollars and an FDIC account. It's registered, I think, with one of the New York, or maybe that's the Gemini dollar coin, which is another one, which is the Winklevoss twins. But in any event, these coins, these stable coins, these coins that are designed to stay to zero, I said stay to one to one to the dollar, are basically improvements on Tether. Now, Tether's surrounding a lot of mystery. Who owns it? Do they have the dollars to back it? And so on. And I view Tether somewhat as the Mt. Gox of stablecoins. Probably flawed, maybe has problems, and maybe one day will go bust, just like Mt. Gox. But the concept of having a stablecoin does allow people to trade in and out of cryptocurrencies without making the conversion into fiat, but allowing themselves to store their money. Now, why would Circle and Coinbase do this? With the help of Goldman. Goldman Sachs is an investor in Circle. So they're clearly looking to the day when Goldman Sachs also is interested in setting up a trading platform. And indeed, Goldman Sachs has an investment in Poloniex, which is also directly a trading platform. So Circle owns Poloniex, Goldman Sachs owns a stake in Circle, and Circle is working with Coinbase and already has launched a stable coin, as have the Winklevoss twins. They have a stable coin, a US dollar coin, and that is, I believe, registered with some New York financial state financial regulator. Now, there's other stable coins, and I saw it. I don't remember the name of it, but $150 million were invested in it, and it is not dollar-backed. It is some type of algorithmically based to keep a stable price. That requires a lot of computer science. But again, lots of money pouring into the space. Then there's storage. One of the things that institutional investors would need if they're going to buy this, they're not going to go out and get a Treasure wallet or a, what's the other one, the Ledger Nano or whatever these wallets are, a Loaf wallet, and have it on their phone. They're going to entrust their cryptocurrencies, tokens, whatever they are, with an institution that's regulated and so on. There's big money in that, and all the big players want to get involved with that. And as I mentioned, there's ICOs. $4 billion last year went not to Wall Street, went not to Silicon Valley. There were no lawyers and accountants involved in reviewing all these documents. Some people just made up white papers, put them online, and had YouTube personalities pump them, and they raised billions of dollars. Clearly, in a more regulated market, an SEC-regulated market, if you go to sec.gov/ICO, you could see what I'm talking about. They already have a page set up for it, and they're encouraging ICOs to come to market, and they're not expecting you to come to market with a white paper only. They want you to have the full SEC-compliant registration statement with all the risk factors and all the financials and so on, so that they can review it. And unfortunately, the people who know how to do that are the bankers, the lawyers, and the accountants, and so on. Big money there. ATMs. Now, Wall Street's not necessarily involved in ATMs, but ATMs have sprung up. I think there's like 1,800 in the United States alone. I think in 5 years, you might have more ATMs than you have payphones, because this is a very, it's a growing area. And it's also part of the payment processing system. You got apps and wallets. Now, payment systems are a big deal too, because payment systems, you might think that if you use Bitcoin, Litecoin as payment, that you're a competitor and that they want to crush these things. Not necessarily. If they can transfer these items, as I mentioned, like Bakkt wants to do, convert them into fiat, and you could do it all faster and quicker and so on, the payment systems might merge. You have a lot of companies that are working on crypto credit cards. It's not just Bakkt. There's also, what is the thing? Well, 401k plans, pension plans. They're talking about that. And then there's ETFs. ETFs are a $4 or $5 trillion business, and there could be a niche in Bitcoin ETFs, Litecoin ETFs, ETFs with a bunch of different cryptocurrencies in them. This is big money, and it's the perfect thing for Wall Street, because you can only push equity value so high. You can only push real estate value so high. Wall Street's in need of another bubble, and conveniently, we have one sitting right and staring us right in the face. Now, those are the general reasons why, but let's look at some of the things that are happening I didn't just make this up. And again, this isn't investment advice. This is just my analysis of what I see happening. But one of the things that I noticed following the crypto space since 2012 is that when the prices fall, the average person who's paying attention, who grabbed their all I need to know is this from that little time period when they paid attention when the price was rising, they think that because the price fell, that what they knew in 2013 is still true. And then when the price rose again for a bit in 2012, yeah, I learned a little bit more and that's all I need to know. They don't realize that continuously things are happening in the space that make what they knew obsolete. And what really impressed me in 2016 was the fact that I was like that as well. I thought, okay, well, that's why it's over. It's done. And all the reasons I had to be against cryptocurrencies, they're not backed. Who wants them? They don't serve any purpose. They waste electricity. I thought, okay, well, I was right, and that's why the price went down, and those things are now gone. But if you start paying attention, you realize that people still value them, and money, and more money is pouring into the space, and more people are working on different projects. There's more investment. There's more work behind the scenes on regulation, trying to get the perfect products like these ETFs so that they can bring them to market. And then you realize that the price is really totally detached from the work and the effort that's gone into it. Now, normally when something collapses, like the price of something, it becomes like a ghost town. So if the price of gold was, back in the day, $35 an ounce, and whatever happened, they found so much gold 600 miles away, and they found it a lot cheaper, well, that mine would just collapse and everybody would leave and say, well, it's just not economical to mine this anymore, and people just forget about that mine. But that's not what's happened. When the price collapses in Bitcoin and Litecoin, it's just still all full speed ahead. And I saw that happen, and I think a lot of people are confused, or they're not quite getting it just because the price fell in January and has been flat and has gone all the way back down to $6,200. They think, well, the price has gone down 60-70%. It's over. That's a confirmation that I was right, that Bitcoin was nothing but a Ponzi scheme, and now everyone's just going to fold up their tents and go home and it's game over. Well, you have to remember 18 months ago, the price of it was $1,000. The fact that it stayed at $6,000 for a year now, basically, because it fell to $6,200 in February and is still $6,200, shows that there's some staying power. But the price is not what shows the staying power. It's what's happening in the industry. Now, for example, in Malta, this past week, 8,500 people met on what they now call Blockchain Island. The Prime Minister of Malta is pushing all this stuff. And I didn't go to it. I don't know what they did there. But they had all the investors there. All the big names were there. They're still full. They don't care what the price is. They're still doing all these types of projects, innovations, and so on. Now, I spotted this Wall Street thing a while back. It was back in March. I think I wrote a post and did a YouTube called Bitcoin is a Dirty Business, and the bankers want a piece of the action. And everything I've seen since then continues to buttress that belief, and we're going to go through some of them. And now I'm thoroughly convinced, and again, I'm thoroughly convinced now, but if something comes along that I can be easily persuaded that this thesis that I've had now for a while is incorrect, but I wrote why Wall Street wants and Silicon Valley want and need a crypto bubble. And so far, and I'm not looking for confirmation bias, it's just the facts are just coming my way, because here's what we're seeing. Just the other day, we saw that Morgan Stanley said that they view crypto, and I've been hearing this a lot, that they're viewing not just Morgan Stanley, but crypto as a new asset class. A lot of the normal, not the normal pumpers, but the real just evangelists or Bitcoin or so on are always saying it's a new asset class, everyone's going to have it. But now we're seeing that it's admission by the large, too big to fail banks saying the same thing, and we're hearing how investors need to have a small percentage of their assets in cryptocurrencies. A lot of people say, cryptocurrency, they're not assets, they're all going to zero. Okay. Now remember, here's a fact from Abacus Journal. The net dollar amount in crypto hedge funds in 2016 was $380 million. Today it's $6 billion. And that's exactly what I'm talking about. The price going lower hasn't really dampened the enthusiasm for the space. In fact, what I'm seeing now is some people are saying that the price targets for $25,000 and $28,000 for Bitcoin by the end of the year still stand. And I'm like, you guys got to be out of your minds for saying that. However, there's reason, I believe, why they say that. Remember, at this time last year, the price was $6,200 and it shot up to $20,000. Here's a few things that I found. Now, this is very, very, very interesting here. So there's a guy named Mark, what's his name, Yusko or whatever. And he put out a tweet the other day, November 2nd. I stand by what I said in April. Bitcoin is just getting warmed up. And he puts these price projections. 25,000 end of 2018. 75,000 end of 2020. 200,000 end of 2022, 500,000 end of 2024. Now, that to me sounds like classic pumping. Talk in your book or whatever you want to say. You say, okay, end of 2018, you're talking 6 weeks. And you're saying that the price is going to rise fourfold. That seems absurd, but that's exactly what it did last year. You say, yeah, but the bubble, that was before the bubble burst. Well, no, it wasn't, because remember, in 2013, the price went from like $40 to $1,000, and the bubble burst. And then it went back, you know, to 1,000, 2,000, and then during 2017, it went 1,000, 2, 3, 4, 5, 6 by November, and then from 6,000 to 20,000. But here's what I started thinking, why is this guy saying this? I mean, it's one thing just to say something. And, you know, we see this all the time. People are always making predictions, and you look behind them and you say, yeah, well, that's because they're pumping their book. But sometimes people pump because they know a little something more. Now, a couple of things I saw there was this one video that was talking about how a lot of Bitcoin are being bought over the counter, not on the exchanges. You don't see it happening, and large amounts, like hundreds of millions of dollars being bought. Now, that leads me to, because they can look at the wallets on the blockchain, that leads me to believe that if you're going to do an ETF and you want to launch an ETF, you have to have the Bitcoin ready. You're not going to go out and buy it that day, because then the price is going to, quote, skyrocket. So it's possible those people that are buying, they suspect maybe they're getting them from miners. And of course, that suits everybody. You don't want the price to go high because you're buying on an exchange. That would be a dead giveaway. So you buy over the counter. And maybe that's what's happening. But then I looked into this Consensus Invest. Now, this is a very, very big conference in New York. It's a one-day event. It costs $1,500 to go to it, and they get thousands of people to go and pay to do this. And there's also a room where you can go and pitch your crypto idea and so on. But here's what I thought was an interesting one, and this really hasn't really gotten much attention. I'll give it some now. Not that my giving it attention gives it much attention, but for those of you listening, check this out. It says at Consensus Invest, SEC's chairman, Jay Clayton. Now, this is the chairman of the SEC. He's going to be at this place. He is going to speak with a guy named Glenn Hutchins. We'll take the stage in a one-on-one conversation. All right, so what? So the SEC is going to be there, and he's going to talk to somebody. I think it's a big deal that the guy from the SEC would be, the head of the SEC, would be at a crypto conference. I mean, he's not there to arrest people, that's for sure. But who's he going to talk to? Okay, yeah, we're back on here. Sorry about that. So I was looking at this this tweet from this place called about this conference, Consensus Invest, and it mentioned that the SEC chairman was going to be there, and I thought, well, he's clearly not going to be there to arrest everybody. He's there to talk to this guy on stage. And what's interesting is the guy he's going to talk to, now check this out. His name is Glenn Hutchins. Glenn Hutchins. And I looked him up on Wikipedia, and I find out that this guy is the head of a fund, Silver Lake Partners, which is a $39 billion private equity firm. And I thought, well, that's interesting. So this guy's obviously dialed in. He has some cash. And clearly it's for investors. You know, he deploys that for investors. He's not worth $39 billion. He must be worth a lot. But, and the reason he's there, he wants to keep in touch with what's going on in the crypto space, clearly with a view to deploying some capital towards some projects. I don't know what it would be. But then I looked up who he is, and it's a big enough deal that the head of the SEC agrees to go to this conference and talk to this guy. But listen to what this guy is. Board member, Federal Reserve Bank of New York. This guy is currently on the board of the Federal Reserve Bank of New York. Now, the Federal Reserve Bank of New York, for those of you who don't know the Fed, that is where the Fed acts. That is the Fed. The rest of them are just regional banks. That is the Fed. And this guy is on the board, and he runs a private equity firm. This is from Wikipedia. Also, former board member, TD Ameritrade. Now, remember I mentioned TD Ameritrade is one of the companies that's setting up a crypto a trading platform called ErisX later next year. So this guy is running a private equity firm, $39 billion. He's a board member on the Federal Reserve Bank of New York. He's a former board member of TD Ameritrade. Listen to this. Member, Council Foreign Relations. So this guy's about as switched in as you can possibly get. And he's going to meet with the head of the SEC at this crypto blockchain conference. Now that's a big deal. If you think that these things are going to zero, then Mr. Hutchins would have no interest in attending this conference. No interest whatsoever in being anywhere near a cryptocurrency conference. And nor would the head of the SEC. The head of the SEC is there, I believe, because they know that there's a lot of money to be made. The big money wants in on it. And they want a regulatory environment that's favorable so they know what they have to do to bring the products to market, to trade them, to store them, to do ICOs, and so on. I think that's a huge deal. I don't know what it means for price or anything, but it certainly means to me that they're not looking to arrest everybody, that they're clearly looking to figure out how they're going to regulate this stuff. Now, why does then this Yusko guy, I find out, he's going to this conference as well? So he knows what's going on. He knows that the SEC is going to be there. He knows that Glenn Hutchins is going to meet with them. Now, guess who else is going to be at the Consensus Invest Conference? Bakkt, the CEO of Bakkt. Remember what Bakkt is? The soon-to-be-launched crypto trading platform and crypto storage solution that's run by the New York Stock Exchange, Microsoft, Starbucks, and Boston Consulting. And they're going to discuss, according to CoinDesk, market evolution and the potential for digital assets. This is all happening November 29th, I believe. Now, things can get announced at these conferences. Who knows? Also, November 5th is the end period for the SEC to take comments on these, there's a slew of ETFs, Bitcoin ETFs. Now, many are expecting that the ETFs will get rejected. That's not priced into the market. And the big issues that the SEC have with the ETFs used to be that it's still the same issue, but they couldn't get these market surveillance agreements where they could figure out what was going on in the market, primarily because 2 years ago, 90% of the trading happened in China. That's no longer true. But they're still not comfortable that there's not a lot of market manipulation. They can't really tell what's going on in the market. Well, Bakkt, which is going to go live sometime this year, may help with that. Coinbase may help with that, where if they become registered alternative trading platforms with the SEC, clearly SEC, if they're registered with the SEC, they can clearly see what's going on in the market, and they would feel comfortable with that. Now, they're not going to have that this month because those platforms are not yet registered and up and running. Coinbase is up and running, Gemini is up and running, but they're not registered as alternative trading platforms, and Bakkt isn't up yet. But once those things are up and running, well, that problem is then solved, because then the SEC can say, hey, okay, we can see what's going on. The other issue they have was liquidity. Now, it's possible that these trading platforms don't gain the type of liquidity that they feel comfortable, that there's too thinly traded markets and therefore they can't approve an ETF. And the other one is storage. They want to make sure that if investors invest in an ETF, that they know that their stuff is there. And that I think they can solve. There's a lot of technical issues, but that is not unsolvable. So the main thing is that they have these market surveillance agreements and they have liquidity. So that's why the ETFs may not get approved. But remember, the SEC has never said, we're not going to approve an ETF because this is a whole big Ponzi scheme and we're looking to arrest everybody. No, they're just saying we're not approving it until we get the liquidity in the market, we can understand. They're not even saying we want it to be this so there's no manipulation. They're saying we want to be able to see if there is manipulation. We need to have some type of insight, some type of clarity through these market surveillance agreements so we can detect it. Because they don't expect ever, I mean, if they would never approve the gold or silver ETF if they were worried that there was manipulation going on. I mean, they can at least say, well, we can see if it's there or not, and we can decide we're not going to do anything about it. And besides, SEC has nothing to do with gold and silver because it's not a security. Any event, so BACT is going to be there as well at this conference. Goldman Sachs backed company called BitGo is also going to be at Consensus Invest. And remember, Goldman Sachs is also involved with Circle. And Circle is the company that's involved with Coinbase. And Circle runs Circle Pay and Circle Trade. And Goldman Sachs and Circle owns Poloniex. Okay, so now you're seeing that maybe this is why this Yusko guy is saying that something might happen by the end of the year. And I believe they need to have this bubble, and they're itching for the bubble, and I think they're going to get regulatory approval on all this stuff. Not all at once. I think they'll get it in dribs and drabs. I don't think they want the price to go skyrocket. I think they want to create a much broader crypto market that isn't just Bitcoin. All right, and then Morgan Stanley, let's see, anything else? Oh, you guess who else is going to be at Consensus Invest? The guy who used to run PIMCO. He's now in charge of, I can't think of the name, Mohammed El-Arian, biggest investor in the world, chief economic advisor to Allianz is the name of the name of the company. So you got the biggest financial hitters at this place on November 29th. I think that's a very big deal. All right, let's see what you guys think. All right, let's see. Pablo Pena, come on, Bitcoin Blues. Yes, that's what we heard right away. Philip Kennedy's here. Hello, Philip. Hello, Hedgehog. What's up? Johnny Moore is here. The dollar is more similar to a Ponzi scheme, says Philip. Eli is here. Hello. Has anyone noticed, says Hedgehog, that crypto market hit its peak when the QE2 hit? No, the gold and silver markets hit their peak when QE2 hit. Crypto markets hit their peak in the end of 2017. Oh, yes, everything stopped and continued. Yes, I think you meant the silver and gold market hit their peak when QE2 hit. They started to go down when QE3 hit the gold and silver markets, and crypto continued to rise. That is correct. Nicholas Sony Wallet, Seth is here. I love Bitcoin ATM, says Johnny Moore. Fees are high, but sure be playing corrupt state lottery. That's true. And then you can, at the store that you bought them from, if they have a ATM, you can probably buy stuff there. And stop gambling, stop buying Bitcoin and Litecoin, says Johnny Moore. By the way, John Moore has done some tremendous work running around Connecticut and New Jersey and getting companies, showing them how easy it is to sign up to accept Litecoin and Bitcoin. He signed up a restaurant, a pizzeria, a vape shop, a jewelry store, going to college campuses. So John Moore is very active there. Follow him on Twitter at, I think it's Johnny Litecoin, Hedgehog. In my opinion, the Fed is behind crypto. So from what I just told you, this guy going to the thing, he's on the board of the New York Fed. So it may be speculation, but there's reason to speculate that. Right, just watching and learning and do's and don'ts. When the dollar falls, let's jump in and take over. That's possible, Hedgehog. That's absolutely quite possible. Greetings. Tide Pod is the new gold standard, says Max. Do you eat them? All right. Max is going to get into crypto in 2020. All right, he's going to sit 2019 out. C Sigma Show, you got to check that out. He's got a YouTube channel. Lots of good stuff there. I was on that show once. Got to wait for a year until after Bitcoin halving before doing anything. All right. Hedgehog, digital gold and digital silver will be the future. Provident Metals has started a new program. I got that email, but I didn't read it. Digital transactions of all PMs. Interesting. Shark Air, we are headed to the cashless society. Gold and silver will be confiscated. You never know. Hedgehog, I plan on buying. All right. Hedgehog, gold and silver, what makes the world function, you'll be able to convert into whatever monetary system they decide on. That's right. See, the thing about gold and silver is people insist gold and silver are money, period. No, they're not. But they are valuable assets that can be, as you say, converted into whatever monetary system they decide. Cryptos are more useful than gold and silver, especially for payments. That is clearly true. Hedgehog, just don't go hog wild. See Sigma, sell your crypto bag to Wall Street on the next run-up. Yeah, if anyone has learned anything about these spikes, like in silver in 2011 or in cryptos in 2017, they don't last. They don't last. Of course, the one day you decide that, yeah, they don't last, that's when it goes up 10 times after you sell it. The backbone will always be PMs. Everyone needs to remember it's not the value of what you have is worth. That's a good point, Hedgehog. It's buying power that it has when it's time to spend. Absolutely. ASMR people, my 401k Did awesome when I was in PIMCO. And Philip Kennedy says, can you comment on the Bitcoin, Litecoin shorts, longs? It appears the Litecoin longs are gaining control. Bitcoin shorts are still in control. Does the Bitcoin, Litecoin futures market even matter? Philip, I don't think so. I just think there's little spurts in Litecoin occasionally. I think they're both in consolidation phases. I think Litecoin, the only reason you're seeing a little extra bit on movement in Litecoin is because it's more volatile. That's the only thing I see. Gigi, have no doubt that pulling people into crypto is a backdoor way to suppress AUAG. Whatever they can do. Remember, I think this is all about whatever bubble they can boost, and if they also can use it to suppress AGAU, why not? Still buying until halving, to see Sigma. John Moore, it's cold, but banks and hedge funds will drive money into cryptos and drive the price higher. That's my view, John, that Wall Street is moving this in here, and it could happen by the end of the year, it could happen early 2019, or could not happen at all. I want to thank everybody for listening tonight, joining me, and please remember to like this video, subscribe to this channel, and also go over to smaulgld.com, SMAULGLD.com, and buy your Smaulgld mug. Thanks a lot for listening.